to discuss about trading strategy for binary options. Today we will be discussing about how one can trade into binary options, the strategy one can adopt. Okay, so let us try to understand this in a very simple and detailed way. Trading strategy for binary options. First of all, let us start with some basic information. Binary options are the simplest financial assets for trade. This simplicity stems from the binary proposition at their heart. You either make a profit if you made the correct prediction, or lose your initial investment if you did not. Okay, so why it is called binary? Because it has only two options. Either you make a profit or you lose everything. That is that everything means the amount that you have invested. Means your invested amount can come to zero at least. Okay, or either you will get some profit based upon the situation. So there are two options only. Therefore, you can tell this way as a binary option. Since binary options function in such a straightforward manner and both the potential profits and losses are predetermined and capped, there is a cap on your profit and loss also. Okay, you cannot make unlimited profit and unlimited loss. So there is a risk, but risk is capped. Binary options trading has become incredibly popular among beginner investors. However, while the risks are limited as I have already told you, they are still there. Means it is not totally risk free. It is risky, but the good thing is that the risks are very limited, which is why you need to which is why you need a solid binary options trading strategy. Many inexperienced traders lost their money to volatile markets, lack of knowledge, or trading with illegitimate brokers. Trading in volatile markets, or you don't not having sufficient knowledge for trading in options, or trading with illegitimate brokers, unauthorized persons, may make you lose your money. The right tactic can't eliminate the risk altogether, but it can significantly reduce them. There cannot be anything that is totally risk free. They can risk cannot be eliminated completely, but you can significantly reduce the same. Now let us start with what are the binary options and how to trade them. Binary options are simplified options contracts that turn every trade into a yes or no proposition. The parties involved predict whether an asset will be above or below a certain price at a specific date. So you have to trade some contracts and you have to predict the price of an asset either will be above the particular point or below the particular point at the particular date and time. Okay, so reference point, the price at which you are trading at the present, the price that you are predicting either on the upper side or on the lower side, and the particular date. These are the very important terms and situations in any options trading. Consequently, you can either earn a payout or lose the money you have invested, depending on whether your prediction was correct. There is no third result, hence, the name is binary. Before choosing a binary options strategy, you have to know the basic ins and outs of this trading type. First of all, binary options don't give you an asset. Means you will not going to own the asset that you are trading for. You do not own the stock you are trading on, or nor do you get in dividends or voting rights like actual stock owners do. It is not like equity shares that gives you entitlement over them. You can hold them, you can store them as an as assets. These are the only contracts. These are derivative contracts. You can only predict their particular behavior on a very on any future date. These are not the stocks, not the assets, either in material form or dematerial form. They are not any type of assets that you can hold or store, or you can claim that these are yours. Okay, if you plan to head into binary options, one of the most important terms to familiarize yourself with is the so-called strike price. This is something is which I was referring earlier. The reference price means the, in simple language you can say that the current price. It is the strike price. This refers to the price against which you trade by deciding whether to place money on the assets going above or below that level. When investors feel bullish about an asset, they'll buy a binary option. See, if you are bullish about an asset, you will buy a binary option. Bullish bulls will buy binary options. On the other hand, when they think the price of a particular asset will go down, they sell. Mean bears will sell, bulls will buy. These two choices are also referred to as call and put. If you buy, it is a call option, and if you sell, it is a put option. Another bit of binary options basics to remember is that you are not trading against the binary options broker, but against other traders. Means your trade is not against any broker, it is against the other buyers and sellers, means other traders. The traders themselves determine the bid and ask prices, although the value always sits between 0 and 100. Bid and ask price. Okay, bid is the price for buying and ask price is the price for selling. As we mentioned, all trades end in either a yes or no result. More specifically, each trader will either earn 0 or $100 minus the options price and fees. Means you can either earn full amount, full profit, or you can end up with 0. In any case you will have to pay the broker's fees, and the strike price will be minus from that particular amount from a particular trade. For example, will be worth more than $1,000 at 5 p.m. tomorrow. Every binary trade has a determined expiry date, which can be hourly, daily, or weekly. Means we were earlier talking about a specific date. This date can be the day, or can be an hour, or can be a weekday. Okay. So every contract, every binary trade has a particular expiry date, which can be a hourly time, which can be a daily date, or which can be a weekly day. Okay. If you think silver will be worth over $1,000 before expiration of that particular date, you will buy that binary option for say $60. Okay. You'll buy at $60, expecting the price to go up and becoming $1,000 before or on that particular date in the future. On the other hand, the person B thinks silver will be at or fall below 1000 threshold, and the sales options for $40. Okay. In case silver does indeed go over the strike price at 5 p.m. tomorrow, you'll earn 100 with and you'll win $100, but from that $100, 40 is for your profit, and 60 is the amount that you have already invested. So you'll recover your cost $60, and your profit would be $40. But from those $40, you will have to pay the fees to the broker as well. Okay. This situation is called being in the money, because you have some money earned in your pocket, so it is called in the money. Alternatively, if the price of silver is below 1000 tomorrow, so you'll lose the $60 you have invested, leaving you with $0. proverbially you will be out of the money because you have lost your money, so you will be out of money. This is not only your loss is $60, but you have to pay the broker his fees, so probably it would be some slightly greater than $60 loss. Keep in mind that the binary options broker also charge fees for trades regardless of the results of the trade. Your broker want to forgive you for that for the only reason that you have made loss. Still, he would charge you even if you may make profit or you lose your money. You'll have to pay his fees. So in either case, your profit is always slightly less than the actual profit you have earned, and your loss is always slightly greater than the actual loss you have incurred. So, if your luck doesn't hold, you'll actually end up below zero in case you lose your money, in case you are out of the money in your trade. Now, assessing the risk of binary option trades. Let us understand how to assess the risk. A central part of every binary options trading strategy is risk assessment. The good thing about this financial instrument is that the risk and profits for each trade are capped and known in advance. You always know in advance that how most you can lose, how much at the most you'll be losing if your trade is not in your favor. So there is no possibility of you losing a small fortune overnight just because the stock price of an asset is dropped. So there is no uncertainty. You always know the maximum loss you can incur on your trades, but at the same time it is also to be kept in mind that still you can lose a lot of money if you are not careful. While a singular Bitcoin option trade is capped at $100, you can trade multiple options at the same time. So if you have traded in more than one options, you will lose money on every option trade. Okay, so your loss can be multi in the multifold way which you have traded entered into trade agreements. Means if you have done only one trade, your loss would be capped to that one trade. But if you have done the same type of trades on different levels, and if the situation is not in your favor, so you'll lose money on every traded item. So you'll lose multifold. So this is to be kept in mind that though there is a cap, but that cap is for a particular trade only. If you are trading multifold, your loss can also be multifold, and your profit can also be multifold in case you are very fortunate enough. While your potential for profit increases, depending on the payout percentage, you stand to lose a higher sum of money as well. So the options trading guide that can help you remove these risks as they are intrinsic to how the markets operate. However, good marker of whether a particular binary options trade is safe is the bid and ask prices. You cannot completely eliminate the risk as we have already discussed this, but there is a something indicator of showing you whether you are going to you are making a good trade or not. It is the good marker of whether a particular binary options trade is safe is the bid and ask prices. As these prices are determined by the traders, they reflect the probability of the binary options trade in question coming to fruition. Hence, binary trades that are most probable to happen based on various technical indicators will have a higher bid ask price. Means in which the probability of earning money is high, so their bid and ask prices would also be high, often around $80. This makes means if you are having an expectation to earn 100, but the cost price is 80, so you can always presume that the this 80 can this becoming 100 out of these 80 can be a very easy game. That's why all are putting their monies in this type of trades. That's why there is a demand for this option, and that's why the bid and ask price is higher, means above 50. This makes the initial investment pretty high and profits very limited, but dramatically reduces the risk of buyers losing the trade. When binary trading happens in a market undergoing a volatile period or a volatile movement or an all volatile environment, the bid and ask prices will always be closer to $50 mark. Means 50-50 chance will be there. This means traders estimate the chances of the asset's value ending up on either side of the strike price to be almost equal. Lastly, when a stock has a very low probability of hitting the strike price come expiration, the bid and ask price will be pretty low, around $50, $15. If you are selling the option, this gives you access to easy but small profits. For buyers, it's a cheap buy in with a low chance of success. Practically every binary option strategy that works really relies on the risk assessment. So before we continue, it's essentially to mention the risks of binary options trading as a whole. With options, unlike traditional stocks trading, where you retain the stock even if its price falls, you stand to lose your entire investment if the markets don't go your way. Okay, so options trading is not similar to equity trading. In equity, you can always retain your stock if you have paid. If you have sufficient balance in your account, you can always retain your stocks even if their prices are below the cost prices of yours. But in the options trading, you stand to lose your entire investment if the markets don't go your way. Furthermore, there's a lot of fraudulent activity in the binary options trading market, with some brokers offering unfair terms or refusing to pay out traders. Before you start trading with a broker, make sure they are regulated by the Commodity Futures Trading Commission and Securities and Exchange Commission if you are in the US, or relevant regulatory bodies in their other countries like Securities Exchange Board of India in SEBI in India, and such other regular market regulators in different various countries. Okay, so make sure that the traders are registered traders, registered brokers you are dealing with, and not falling prey to unauthorized, illegitimate traders and brokers. Okay, now let us move further to discuss the strategies for binary options trading. Let's go over some binary options trading strategies you can use to improve your overall success rate. Most strategies are not mutually exclusive and can be combined to formulate an approach that fits your trading style. Means there is no clear cut demarcation between these strategies. You can always apply a mixture of strategies, but overall we have tried to make some demarcation and simplification for your understanding it better way. Okay, so let us first see which are they which we are going to talk about. The first strategy is always following the trends. The second strategy would be to identify the news trends. 60-second strategy we'll be discussing 5 minute strategy, hedging strategy, straddle strategy, pinocchio strategy, and then we'll be moving to give you our final thoughts. Let us first understand each and every strategy in detail, a brief detail, not so very long details, but let us try to understand. First of all is following the trends. This is the most commonly employed strategy both for binary options and trading financial assets in general. Following the trends is a pretty common sense tactic. As the name suggests, you track the current price trends for any underlying asset you are trading. For example, if the price of gold is in upward trend, As it often is during inflation, you make your predictions based on the current movements of the asset's price. If the price seems to be rising, you call, and if it goes down, you put. It is simply so. This is the simplest of the binary option strategies, but even it isn't the straightforward in reality. While the price of an asset might be in an upward or downward trend, these trends don't follow a straight line. Means there is not a straight line that the price of an stock will always go up on the daily basis. Sometimes suppose you have bought on a particular day, and the next day you'll see a fall in that price and you sell it, and again on the next day you see that the stock is even higher price, even trading on the higher price than the day early than the previous day. Okay, so these trends are not always and need not always be straight line trends. Instead, they zigzag between high and low points daily. As a result, you have two choices. The first is to follow the general trend by buying or selling binary options with longer expiration dates, where your prediction falls in line with the overall trend. Rely on the so-called candlestick charts to make sense of the trends. These charts are a series of bars depicting the low, high, opening and closing prices of assets you are betting on, where the body of the candle is the range between the opening and closing prices, and the wicks reaches reach the highs and lows. Alternatively, you can trade Alternatively, you can trade by relying on the zigzag price swings. This is a significantly riskier proposition, as these swings are less predictable and stable than the overall price movements. On the other hand, going against the trend during these swings opens up the opportunity to earn more profit. If you are looking for a binary options trading strategy that works, following the trends is probably the safest. However, they tend to yield considerably lower returns than riskier trades. Furthermore, trends are not eternal, meaning you can always end up losing money if things unexpectedly turn around. Okay, so following trends is the safest but not the most rewarding. The next strategy can be news trends. This strategy represents a variation on the previous approach. While following the trends relies chiefly on a technical analysis of how a particular asset is performing, the news trend strategy scores the news and global events for market relevant signals. Means current developments in a particular area can always affect the markets, and following those developments news will make you understand if there is a expectation of a price of expectation of the price of a particular asset to go high or low based upon that particular development and news. As any binary options guide will tell you, you'll want to focus on regarding the news related to the underlying asset you are trading for. News events can sometimes turn the market upside down, taking the trend in the opposite direction of what the technical metrics were telling you. There are countless examples of news affecting the prices. New government regulations, acquisitions, SEC investigations, means SEBI investigations, green energy subsidies. All of these events can push the price up or down at any given time. Even the war related news nowadays are in the very trending news is. Okay, the best advice would be to keep an eye on both technical indicators and news events simultaneously to better gauge how the prices for underlying assets will move. The third strategy is 60-second strategy. The 60-second binary option strategy focuses on making binary options trades with a 1 minute expiry. This strategy is popular for several reasons. First, the sheer amount of trades you can make daily greatly outweighs what's possible with trades that expire hourly or daily. Secondly, the 60-second strategy appeals to beginners and experts due to its relative ease of application. The key here is technical indicators to predict whether the price will be when whether the where the price will be when the trade expires. Probably the most important metrics are the support and resistance levels, which represent the typical highs and lows of the asset in question. With a financial instrument such as binary options, even the most rudimentary analysis of technical indicators can help you improve your chances significantly. Traders with more experience can move beyond solely using support resistance levels in their analysis and factor moving in, averages into this binary options daily strategy. These come in handy for removing the minor, less predictable variations in price levels. This strategy works best when the market isn't too tumultuous, with the price levels remaining between resistance and support levels. If the price breaks through, it's best to wait for the situation to stabilize before employing 60-second trading. The main risk involved is losing a lot of money quickly. With proper technical analysis skills, the risks are reduced but still very much present. The next is 5 minute strategy. Another hugely popular tactic among binary options investors is 5 minute expiration trading. Trades with 5 minute expiration dates retain the volatility of 60-second trades but reflect the overall trend better, making your predictions safer. Like 60-second strategies, the 5 minute binary option strategies requires traders to rely on technical indicators, specifically candlestick charts. You should review them in 1 minute intervals to get the most precise data available. This represents a type of trade to focus on rather than a specific strategy to employ. Instead, you should use other methods we have showcased here in both 1 minute and 5 minute trades. The next strategy is hedging strategy. The binary option hedging strategy, also called pairing, involves placing both a call and put on the same asset simultaneously. By playing both sides, the trader can minimize losses since they'll gain something regardless of the result. Okay, so this is the safest strategy. You always play from the both sides, means you call also and you put also. This tactic does have its roots in betting, where you cover potential losses by betting on both teams. With this strategy, traders can remove many risky speculative elements from binary options trading. What's important with this approach is that you calculate how much profit you'll have at the expiration in each scenario, so you don't end up bleeding money. This isn't always possible and depends on the bid and ask prices as well as the payout percentages with each broker. Additionally, this binary options trading strategy does stifle your profit potential considerably, as you'll always be paying the buy in for both options. Any profit you accrue will be minor, but the risk involved will be minimal. The next strategy is straddle strategy. The straddle strategy is a type of hedging best used in volatile markets when you know the price of an asset is about to change but don't know the direction. It has a natural synergy with the news trends approach. You'll need to keep a close watch on important announcements. For example, if it's public knowledge a company on whose assets you are betting on are about to report their earnings, which usually affects stock prices, you need to put and call an option. Both need to expire at the same time. This way, the binary option straddle strategy always allows you to minimize the risk by trading both for and against this asset. Additionally, by playing against the current market lows, put when the price is rising and call when the starts dropping. When it starts dropping, you'll be always able to increase profits, as the price for buying and selling will be better if they are loss less probable to occur. The next strategy is Pinocchio strategy. The Pinocchio strategy is named after a specific kind of candlestick in a graph where the candlestick itself is short but the wick is long. Just like Pinocchio's nose grows whenever he tells a lie, the wick grows disproportionately compared to its body when a current trend is not there to stay. Means it's lying. For example, if the price of gold is rising currently, but the graph says the price will actually turn around soon, you take the put option betting that it will fall. This strategy opens up room for really significant profits, but there are a few caveats. First, there are significant risks involved. Trends are trends for a reason, and they don't break or stop that easily. When trading with the Pinocchio's binary options strategy, you'll be going for predictions that are less probable. Thus, there is a significant chance of losing money. So, friends, we have learned many trading strategies, and you can always employ a mixture of these strategies in any trade that you are going to take. Now, let us finally review what we have learned. Let us put our final thoughts on this subject. Here, we showcase the most popular binary option trading strategies you can employ when dealing with this financial instrument. All of them are useful for both absolute beginners and experienced traders alike, and each is useful in its own right. Still, it's crucial that you are aware of the involved risk at all times. Just like any other trade, binary options trading is inherently risky. The golden rule is to never play with money you can't lose. Stick to strategies appropriate for your expertise level, and trade with underlying assets you have a solid knowledge of. Okay, so friends, I have tried to cover as many points as I can in this video, and hopefully, this will be very useful for you, and you will try to imbibe these points that we have learned today in this video in your practical action. And I hope that uh, with these insights, you'll be having your trading time a very joyful and rewarding. Thank you. Thank you very much.